This is the Friday, September 27th, 2013 version of the Market Plus segment. Joining us now is Jamey Kohake. Jamey, welcome back.
Thank you, Mike.
We've got a number of great questions here from our viewers on Facebook and Twitter. And Josh has a question coming back to look at the hog report and where we're at with hogs. He's asking, how will the spread of this recent disease, PEDV and PRRS, affect hog herds going forward? I mean, what is the market taking into consideration as we watch the spread of this disease?
I think a lot of that was priced in here the last week or two when it came back in the news again. I know a lot of producers here just across the state of Iowa really have taken a beating with their numbers. But I think a lot of it is in the market right now and priced into the market. So I wouldn't be getting too greedy and thinking we're going to 105 or something. I would put some protection on if you can lock in a profit and take advantage of this rally. I think you could knock it back pretty quick and have to have some bullish news coming into year end to put new highs in.
And are we kind of anticipating this disease to be recurring until we get a decent vaccine? I mean, are the large losses this year in numbers going to be repeated probably until we can find some way to cure it or contain it?
Probably on a smaller scale. I don't think probably at near as large, but yeah, I could see it popping up sporadically, maybe like a mad cow deal every 3-4 years. Probably a little bit less than this on the hogs, maybe a little more ample time period, but something like that, yeah.
Okay. All right, now as we take a look at the wheat market, Tim in Crookston, Minnesota is asking, and we mentioned this briefly on the show, but what's with the fire under the wheat market this week, and what sales targets should we be looking at for hard red spring wheat?
Okay, yeah, the first part would be Argentina would be the first catalyst. They've had a freeze, shorter crop, expectations that our demand is going to increase. China, wheat prices at all-time highs. Demand shifting to us off of that. Russia with production issues as well. So a lot of talk in the real market that we will get new demand, plus our weak dollar. Dollar has really fell out of bed again with this tapering talk, debt talk, wrangling across D.C. has really softened the dollar up, and that's helped that as well too.
Now where has the dollar fallen to roughly?
We're down just a tad bit above 80. I would saw rallies back to 81. Buy the euro, sell a dollar here short term until this infighting in D.C. gets resolved. And right now it looks to really tangle on until the middle of October when the debt deal has to be done.
Right.
They'll run the clock out again, I'm pretty sure, till the 23rd hour and 59 seconds.
Sure, as we've seen them do time and time again over the past number of years. All right, and then what sort of sales targets should you be looking at in the hard red spring market?
That's a tougher number there. The market where the liquidity is, where the fund money is in the Chicago contract, the soft wheat number, and the number there would be 600-700 a week is what we need. Top of my head, I don't actually know. I don't trade a lot of the Minneapolis wheat real actively, but I can get that and tweet it back to them.
Okay. All right. As we take a look, Austin in South Dakota, talking corn puts, is it time to take profit on our valuable corn put options, or is the harvest low still in front of us?
That's a great question. Had a lot of talk this week about that. I would take some profits. Technically, this thing does not want to break down. We've had bearish news, like we said on the show, better than expected yield talk, and we still can't break this 445 mark pretty much. I think you can push back to 470, start back over again on a lower leg. But yeah, I don't see anything wrong with banking some profits on half of those or a third of those. Look to put them back on a rally to 470.
Okay, and then take advantage, and then perhaps prepare to begin that downturn.
Yeah, downturn there, depending on what the rest of harvest looks like. I think the best yields are going to be this first third of the crop. I think the later harvest could be the worst, and we have to fall apart here soon. But if he does have a large production and on-farm storage, I would look at selling the marsh just as a carry play. Store the corn. The market's paying you a little bit of storage, and just sell the marsh there and not have to worry about this front month, December, maybe getting jerked around with yield talk and is it going to rain tomorrow or not, and harvest delayed and all that.
Now, as we're talking, reaching out into the middle of October, looking at the news reports coming out, is the trade still anticipating more bullish numbers for corn on the October USDA WASDE report?
I don't think so. I think it'd be more neutral as we're leaning at right now, but I think the report tomorrow, or I'm sorry, Monday, could be more of a shaker. The October one still lagging a little bit behind harvest, on a 5 or 10 year average, But 14 billion, number I think will be the key there. Yields are 158. I think that's got to be the top end right now. Low end could be some numbers at 153. I'm at 156 right now.
Okay.
But I think the report Monday, historically, the last 15 years, the one Monday at 13 and the last 15 has really been a shaker. And I think it could move the market first couple of hours. I don't think it's a game changer. And
okay, not a limit up, limit down day.
Not holding there just because harvest is progressing. The weather looks great past Saturday afternoon.
All right. Now, kind of looking at general condition of the crop, you get a lot of windshield time. Mitch in Wisconsin says there's some sick-looking corn in the western part of the dairy state. I was on I-80 coming through Iowa, saw a lot of corn look like it was blown down. Heard similar reports in Illinois. What are you hearing? What are you seeing? What does the damage look like in the corn crop?
I don't think the market is playing the damage at all. Just heard this last storm we can have 2 weeks ago, and you could take a ruler and put one end at Ames and the other end, south of Omaha, and put a diagonal line, and all that wind damage there, plus out by where you live. Market, I don't think is treating that. I don't think they care right now. I think it'll have to come in the final production numbers is where it's at. And I think the market is assuming too that the Eastern Corn Belt, which is supposed to be the best, will make up for any crop losses out here on a big scale.
Sure, and because we are looking at pockets of dryness and down corn versus record crops in Ohio, Indiana,
Illinois. Yeah, I mean, there's some early corn, 220 plus out east. It's not widespread. I mean, still a very small sample size done, but it's not like it was last year where, you got 2/3 of the Corn Belt, burnt to a crisp.
All right. Now, Val in Iowa is asking just a general question. I'm sure it's on a lot of producers' minds, especially if they haven't sold anything coming into harvest season. Give us a thumbnail fall marketing strategy.
I would sell beans, look to reown. If we can run in some tight carryout numbers, if exports stay good, big export number this week, but that was expected because China loaded the boats up big time and bought some, even though there's no price on it, there's no destination time. It's an open window contract, but they did buy, a huge amount. But if we can keep exports steady, look to reown later and store corn until March if you got on-farm storage. But beans, there's no carry at all.
Okay. All right. Now, before we let you go, the dairy market, we're in the front month, we're down about 15 cents. Where do you see dairy headed?
I don't see dairy doing a whole lot right now. We've got a nice little range in the dairy market. It's not doing a whole lot. There is a lot of talk that we could scale back production to help support the market. But other than that, I don't see much out there. I would sell rallies. I'd sell December up around 17.5. Is what I would do right now until we got some fresh news. All right, and then do you have a trade of the week? Anything looking good at you for this next week? I would buy December cattle at 130 area, get a setback, and I would sell hog calls, get some deep out of the money hog calls. I think this could be maybe a start of a leg lower with some fun money coming out. All right. Thank you so much, Jamey. Appreciate you being with us. And thanks to all of you for sending in your questions via Facebook and Twitter. Please continue to do so, and we'll continue to get expert analysis for you. Thanks for watching, and have a great week.